The time is 11 o'clock a.m.
Sorry about that.
Got it right on the hour. Yeah.
Yeah. Okay, I'm Sunny Harris, and this is Dancing with the Markets. We'll be using Sunny Bands, and this is my favorite indicators. My passion in life is teaching and helping beginners and intermediate traders who want to get better. Traders who've not yet become wildly successful, people who have not traded much and want to learn, and folks who want to improve their trading results. I get a lot of calls from people who say, I'm underwater, I had a lot of money. I've counseled people who have lost over $1 million trading, and then we work them back up again, just the same way they worked themselves up in the beginning. So I do love to teach and mentor and consult. This is my cell phone. You can call me anytime but during this presentation. And I love to take calls from traders. This all boils down to all the results shown here are hypothetical, not actual, and don't trade with money you can't afford to lose. Past performance is not a predictor of future results. All investing involves risk of loss, and individual investments may vary. The examples provided herein may not be representative of typical results. Your capital is at risk when you invest. You can lose some or all of your money, or even more than all if you're trading futures. So never risk more than you can afford to lose. The full disclosure and details is on my website, moneymentor.com. You see it at the bottom of every slide. I'm going to tell you today exactly how I trade every day. I've been trading for 43 years. I use my very own indicators because I couldn't find anything that was standardly available. And I even purchased from many vendors, and I couldn't find anything that was truly profitable. So I use my Sunny Bands, my dynamic moving average histogram, and my slope indicators to tell me where to trade. And I'm not going to hold anything back from you. I teach you everything that I do. So here we go. I'm going to introduce myself. This is long and boring, but I am a professional trader and have been for 43 years. I trade futures, stocks, and crypto, but I don't trade options. So I'm going to tell you a little bit about myself and show you how I trade. I've been a professional trader since 1981 through all the crashes, 87, 2000, 2007 to 8, and the 38% COVID crash. And the next one, because we will have a next one. There's always another crash ahead of us. I trade the S&P 500 futures contract when I'm trading futures, which is every day on a 5-minute chart. I use the 1-minute chart for confirmation and the 5-minute for the signals. And I've heard that the S&P is the most difficult market to trade, but I don't think so, because I've been doing it for over 43 years. That says almost. I do have long-term stock holdings. Long-term to me looks like a week or more, because when you trade 5 and 1-minute charts, a week's a long time. And I do trade cryptocurrencies. So today I'm going to show you how I trade using Sunny Bands, my dynamic moving averages, and I'll tell you all about that, which are really unusual. They're not like any other moving averages. And I'm going to show you some fast markets. And if I get to it, we're going to look at my compounding spreadsheet. I call it Ultimate F. You can get one free Sunday night Sunny Side of the Street if you just text me SSS, Sunny Side of the Street, to 760-908-3070, and I'll send you the next Sunny Side of the Street. And I explain how what my indicators are telling me about 12 different markets in the newsletter. Email me if you can't find it. I'm sunny@moneymentor.com. Or when I post these slides to my website, moneymentor.com, you can click on this in order to get the free issue. So I do post the PDF on my website, moneymentor.com, and membership is free. I also have a free podcast, The Sunny Harris Show, and I interview legendary gurus. So all the people who have come before us uh, are, I've got 49, I think 49 podcasts posted so far, and they're fascinating to learn these about these people as real people instead of just traders. Uh, there's where you can get it if you want to go to moneymentor.com/podcast.html. You can see the podcast. Just a few of the people who've been on: Larry Williams, Jake Bernstein, Steve Nissen, Linda Raschke, Dr. Alexander Elder, Cynthia Case, Sherman McClellan, originator of the McClellan oscillator, Carolyn Baroden, the Fibonacci Queen, Greg Morris, John Bollinger, and many, many more. So this is what Sunny Side of the Street looks like. It's a website, and I post, like I said, 12 the analyses of 12 different markets on here. Send me SSS for a free issue. I was number one trader twice with 365%, and the next year with 178% profit. That's while I was a CTA. And I was using Sunny Bands in my dynamic moving average to trade. And right there at the top, you can see that's the ranking. I do have a live trading room every morning from 9 a.m. to 10. I searched the East Coast time, Pacific time, 9 a.m. to 10 Pacific time. And that's by subscription only if you want to do it every day. If you'd like to stop in once, type or text TAWS, Trade Along with Sunny. So type TAWS to my phone number and I'll send you a link so you can come in on tomorrow, Wednesday. So daily live trading room, 9 a.m. every day for 1 hour. And we're up 228% so far. This is the equity curve. And this is live. I mean, this is not something that I back tested. This is live trading. I grew up dirt poor in Appalachia. Now I have 3 degrees in mathematics. And after I retired, I got an AA in telecommunications and photography. And I've had lots of business and programming courses at Stanford and Wharton and UCLA and UCSD and just lots of places. I love to go to school. I've been programming actually for 56 years now and trading for 43. I was a systems programmer for Lockheed right out of school. And then I became one of the founders of ISCO, which was the world's leading computer graphics software. When I was 30, I sold my stock in the business and retired. And then I gave my money to money managers and they lost $75,000 in 3 weeks. And I thought, I can do that poorly on my own. And so I taught myself to trade. I read 117 books related to trading in the first 2 years. And now I've read 747 trading related books. But the first year I watched the market, I got the rhythm, I learned, I charted by hand because back then they didn't have computers yet. But I didn't enter a single trade for the first year of just watching. I did do a Trader's Catalog and Resource Guide, which was a monthly magazine for 8 years. And that was a lot of fun. Let's see if I can get the next slide. My mouse not working. I've written 6 best-selling trading books: Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy, Going Vegan with my friend Linda Blair, and Using Easy Language 9.x with Murray Ruggiero. And now I've released the definitive guide to TradeStation's Easy Language and OOEL programming with Sam Tennis. And that's available on Amazon. And I've written articles for all the major trade magazines. I was on the cover of Omega magazine once upon a time. And here are the covers of the books so you can see what they look like in the bookstore. And there's with Linda. And these are the 2 most recent books. I've been awarded critical acclaim as the top 10 consultants in stocks and commodities, also top 10 courses and seminars. Told you I was #1 trader rated by Stark Research, and I belong or have belonged, some of them are gone now, oops, to all the major industry groups. I have a little site on my website called Quips. It's Quips and Quotes. Um, and I'm not going to read all these to you, but the one I'd like on this page is, "Hi, Sunny, I wanted to share with you my profits for the day and say thank you." So this fellow made $19,412.50 last Friday. And this one's a lot of fun. "I wanted to say I love them, your bands. I've torn apart Bollinger Bands, Keltner, etc., and nothing comes close to what you have created. I've talked to CMTs who've said, oh yeah, they're just bullies, and I almost spit out my coffee. I've watched your videos where you're walking a new customer through their use, and I got it all, understood. The turns are right there. Bullies are too general, and Keltner, which Rasky says she likes, are only a hair better than bullies. Yours blows both of them away." Of course, you already know that. And I have a Facebook page where you can see what I'm thinking about the markets, and just look up Sunny Harris on Facebook and you'll see. You can also subscribe to Sunny Side of the Street. Text me SSS, somebody already has. I have customers all over the world, so don't be afraid to call me from wherever you are. I answer the phone at strange hours. This next slide, though, is probably the most important in the whole presentation. So I want you to see if you can do this for yourself with your own goals. So it's how to make a six-figure income. Let's start with $120,000 a year. That's a six-figure income, and it divides nicely. That's, if you divide it by 12 months, that's $10,000 a month. Now, that's hard to envision. It's hard to think, well, next month I'm going to make $10,000. It's kind of a task that you can't see to doing it. It's too big of a number. But in 20 trading days, pardon me, that's just $500 a day. Now it looks more doable. But it's also just 5 trades at $100 each. So if you can pull $100 out of the S&P 5 times, you've got it made. And there's usually between $1,000 to $3,500 a day potential in the S&P if you go both long and short and only trade one contract. So here's what I do. I'm going to break it all down and show you exactly how I trade. And some of the next few images might look complex, but I'm going to explain them to you because they're really not complex. I use color coding to key me into action. So I use the same colors on every chart all the time so that I react to them instinctively. So here is what I'm looking at. This is a chart of the E-mini. It's a daily chart. And you can see where we are as of this yesterday, I think. And this has my sunny bands, my PHW indicator. Those are the yellow dots that you see. My dynamic moving average histogram and my slope indicators. That's what I'm looking at while I'm making decisions about whether to go long or short. And you can see the red vertical lines and the blue vertical lines. Those represent buy and sell signals. On a 15-minute chart, this is what it looks like. Come on, there we go. So I have a little indicator on this that colors the nighttime session different from the daytime session, but you can see the red and blue candles are the day session, and this is the same indicators on a different time frame. And here's the same idea on a 5-minute chart. So you can see that Sunny Bands works on all time frames and on all symbols. And here's a 1-minute chart. That's supposed to be, well, that didn't work very well. So we'll just look at it with, as if that yellow piece of paper was on the front of this thing. I was going to ask you if you could tell whether it was going to go up or down from looking at these prices right here. It looks like it might continue down, but it goes up, and I'm going to tell you how Sunny Bands lets you know that that's the case. There's no such thing as prescience when it comes to the market. We look at all of us look at the hard right edge of any chart that we're looking at. We're watching the currently forming price bar. And we don't have future data. We have past data, but there's no such thing as future data. Nobody knows where the market is going next. But what I do is I ask what is true all the time. So I'm comparing my indicators to price action. I'm comparing price action to previous price action. I'm looking for formations, technical analysis. I use all the things that I know all the time. So just know when you're trading the market that you're trading against me and other people like me. So we do our best to take your money from you. So we ask what is true with every new bar. So it's easier to see in hindsight what to do. But the chart of just the Dow, just the bars, doesn't tell you much. In fact, it looks pretty scary. Is it going down further? Is it at a bottom? Is it going to turn around? What is high and what is low? They say buy low and sell high. How do you know what that is? So I add Fibonacci lines to my chart. So there you can see just a bar chart or candles. And then the Fibonacci lines added to that. And up above here is the price extension, which is where we're going. This is yesterday. I add something I call attractors. You see, Fibonacci lines act as magnets. They attract price to them. And you see that over and over. You see that right here. See how this Fibonacci line hits and hits again, and then they bounce off of it. This red line or orange line, whichever it is a trend line based on this low and this low. It hits it again here, and there's a good chance it'll come down and hit it again. Don't know when, but it's down there acting as an attractor. Simple moving averages, exponential moving averages, all the indicators are also attractors. They attract price to them. On this one, I have a little moving average, 3 moving averages that I wrote. It's 200, 55, and 21. And the nice thing about this little indicator that does something others don't is it puts the value of the input. So 21 is this one. And it also has a greater than there saying price is greater than the 21 moving average, greater than the 55, and greater than the 200. So it makes it, like I say, I like things to be easy to read and easy to make decisions on. Oh, come on. Having a little technical difficulty here. So then I'm going to add Sunny Bands and the dynamic moving average histogram, who's on top, and slope, and PHW. Wow, I got a lot on this one. Well, that one doesn't have PHW on it yet, does it? We'll show you that in a future slide. So there's the Sunny Bands. Here's the histogram. And that measures the difference between the purple and gold lines on the dynamic moving average. So that's a difference between the values. And when they get wider, the lines get taller, longer. And when they get close together, the lines shrink up. So I can see something with that. I've added attractors. They're not just support and resistance. Trend lines are attractors. Moving averages are attractors. Fib retracements are attractors. Elliott waves are attractors. Anything that attracts price, I call an attractor. We're going to look at my PHW now, which stands for potential hourly wage, PHW. And I asked this question in the beginning of my trading. Can I make more by trading than by working for an hourly wage? If you're losing money trading, you really should be working at McDonald's instead. And these dots are at the ideal turning points. Now, nobody can catch all the ideal turning points. So, as a measure, I take 60% of the ideal as my goal. That way I can give up 20% on the intake, 20% on the out, and I still have 60% left in the middle to catch. So you can see these yellow dots and how right on the turning points they are. This indicator also prints out its value, so you can see what the ideal is and what the PHW value is, how many bars it took, and what profit is in it. I also have a radar screen version of this same indicator that lets you sort by highest PHW value so you can trade the stocks that have the most potential. Here, for instance, is buy and hold. Sorry about that. Buy and hold on the Dow Jones. So if we begin at the beginning, buying at the beginning of 2020 and selling at the end, so that's just buy and hold, that's $34,000. It sounds pretty good. 60% of the ideal on the same chart is 327,000, almost 328,000. So if you were to be able to catch those dots instead of 34,000, you make almost 10 times that much. That's definitely quite a difference. My trade along with Sunny, TAWS I call it, is live trading room every morning, facilitates the learning of my indicators. If you can actually see them in action, they seem to make a lot more sense. And I show you exactly how I trade. You'll watch me do it for an hour. So I have this live trading room every morning, and of course, sometimes I win, sometimes I lose. But I'm going to show you a 99-second video condensation of the trading room in hopes that you will join me. Wednesdays are free. With the flat DMA with gold on top, I don't really expect it to go much lower than the DMA. If it goes down and closes under the DMA, then I'm short. Next 1 minute NASDAQ is going straight up. Look, there's it's trying. Let's see what this one's doing. Come on. Order filled. Okay. And this is trading with TradeStation. What I'm watching right now to see if that's going to go skip
Oh,
over to the next trade.
And if it does, it seems to me like it's going to move a little further. Order filled. There we go. Good job. Thank you. That was a perfect exit on that trade, wasn't it?
Sure was.
Yeah.
Yeah, it was.
I've taken 2 of them, Sonny.
Have you? Did you make any money?
Yeah.
Excellent.
Yeah, absolutely.
And don't be afraid to give me a call or shoot me an email. And I've also got another website, easylanguageooel.com, for the 2 latest books. And how do we get out of that? Okay, let's look at something else. Let's look at an NVIDIA chart. So I sold all of my NVIDIA right up here on this bar. I had a sizable holding and took profits right there because the Sunny Vans told me to. This is a daily chart. Let's look at it, buy and hold versus trading. $923 if we buy at the left and sell at the right, or 4,400 trading it. So it's real difference between trading and buy and hold. And that was on a daily chart, trading 1 share. Here's another one, Tesla. That's what Tesla looks like to me. I exited my Tesla on this red bar as it passed under the upper inner band. So I was holding Tesla from back in here and exited up there. Buy and hold on this one is $237 a share. Trading is over $2,000 a share. And here's the S&P 500, same idea. Sunny bands, histogram. And then the 3 moving averages. I can see I'm above all 3 moving averages here. And I trade that S&P short term. So you can see the ideal turning points here with the yellow dots. On the S&P, if you did a buy and hold, it's $418 on that chart, but trading is almost $5,000 per share, and it's 60% of the ideal is 29.23. So you could have made an ideal of 4,800. That's if you could catch every single yellow dot, but 60% is 29.23, which is still better than 418. Trading one share over 20 years. This is the S&P again on a 15-minute chart, and you can see here that we're below the 21 and greater than the 55 and 200 moving averages. And you can see the signals, how close they are on the sunny bands to the yellow dots. They're very, very accurate. If you buy and hold that one, it's $75. Trading it's $15.16 per share, or 60% of that is $910. So $910 trading one share versus 75 on buy and hold. And that was in 9 months' time on the 15-minute chart. So the SPY on a yearly chart, this one's a Metastock chart, and you can see that I have sunny bands also on Metastock. And you see the yearly chart, we're well above the upper outer band. That's a very bullish sign. Here's the ES on a daily chart as opposed to that yearly chart. And you can see we are now under the flat DMA, which is a sign. I'll tell you about all the rules in just a minute. So on a 15-minute chart, we've got that. And the trader's view on the daily chart is this one on the S&P. And here we can see where the signals are. Watch the arrows. Long, short, long, short. So we caught this trend going up through here. And there's another buy signal right there. My indicators work on any symbol and any time frame. Usually in the chat, right after I say that, they'll say what symbol does it work on. So it works on any symbol and any time frame. And I've never optimized my sunny bands. The math's the same as it was 37 years ago, and it still works. So how do you know to buy Apple at 12 cents in 1982 and hold it for 40 years? Well, you don't, unless you have sunny bands in the histogram. And you don't have to have my PHW. It's just nice to be able to see where the ideal turns are. Sunny bands is an offshoot of my dynamic moving average. I designed this one to investigate the excursions from the DMA, both for favorable and adverse, and the bands are average true ranges away from the dynamic moving average, or I call it my DMA. They are not like Bollinger Bands. Yes, Bollinger Bands are bands. It's a channel around price action, but he uses standard deviations away from a simple moving average. Standard deviations tell the market where it should go statistically, and a simple moving average has a lot of whipsaw in it. My DMA is smooth and dances seamlessly with the market. It calculates its own inputs internally to the mathematics. And the ATRs ask where the market has been and is going. So we know current market activity, but I don't know where it should go. Simple moving averages. Let's look at this. Here's a 15-minute chart with the simple moving averages on it. And there's several ways to trade moving averages. You can trade when price crosses above or below them, or you can trade on the crossovers of the moving averages. There's probably lots more, but those are the two obvious ones. So here they are again on the 15-minute chart. No, sorry, this is it's a 15-minute chart, but it says daily. So this is a 15-minute chart, and you can see we've got a sell signal from here down to here, and a buy signal at this level only up to the DMA because the DMA is flat. Here, if we look at them on Apple, you can see simple moving averages again, and look where they cross, way out here. So this is the buy signal on the simple moving averages. This is the buy signal on sunny bands. Quite a difference when you catch the move there. Here they are, simple moving averages on Apple on a daily chart. And this is what I wanted to show you is see this crossover and a crossover here and a crossover here. So during any congestion, standard moving averages will whipsaw. They will go back and forth and back and forth. And it's that action that loses the money. So you can catch the trend and then you get whipsaw, whipsaw, whipsaw again, another whipsaw. So this whole area through here, you lose money because you're in whipsaw. So here's where the crossovers are on the moving average. You can see lots of trades, most of which are not successful. They give you late signals and whipsaws, which is price or an indicator moving back and forth with no trend, and you lose money on both sides of a price swing that way. So that last chart was full of whipsaw. So let's look at the crossover signals for a second. In my experience, my limited experience, whipsaw eats up all the profits you made from the trends. And that's the biggest problem with most indicators. The crossovers are late and it's a very lagging indicator. Many years ago, I set out to cure whipsaw because I saw that's where I was losing money. And if I could turn those into wins, it would make all the difference. So I wanted the links of the moving averages to change with the market automatically. So I designed tables of possibilities. So if the market does this, then you choose this value. If the market does something else, you choose another value. And I had a table about lookup values. And then after that, because the tables didn't work so well and they were also static, I developed the mathematics for my dynamic moving average. I worked 18 months, 18-hour days, 7 days a week doing the research. And now I have 8 bankers boxes full of research that I did 36, 37 years ago. So I did it. I created a dynamic moving average, my DMA, and it calculates its own lengths. And they are not static. They aren't looked up in tables. They are mathematical values that are calculated internally. Standard moving averages will start out with the values 9 and 18 for the short-term average and the long-term average. And mine changes with every tick of the market. It dances with the market. So here they both are on a chart. You can see the simple moving averages are the thinner lines and they cross over lots. And you can see here that my DMA stays purple on top all the way down through here. So it doesn't cross back and forth, back and forth. If you look at it closer, we can see the whipsaws in through here and how steady the dynamic moving average is all the way to here. It's unique. Two things are unique about it. And it's unlike anyone else's moving average. There have been lots that have tried and frankly, nobody's come close. The DMA calculates its own lengths dynamically within the math. And on top of that, the market moves about as much as it usually moves. And that's why I use the average true range. Here are the rules. Now this should say blue, not green. When the market is going up on blue candles and gets above the upper outer band, UOB, upper outer band, and turns red and dips below the upper outer band, I go short. When the market's going down on red candles and gets below the lower outer band and turns blue and pops above the lower outer band, then I go long. Yes, there are more complex rules to it, and I'll show you this in just a minute. So on that Apple chart, the investor buying at the beginning would make $168 a share, and the trader made $2.99 per share. But the day trader, trading intraday, made $610 a share. Now I'm officially a day trader. I close my trades at the end of the day on my E-mini trades, and I wait for the next morning to get back in again. I typically make 3 to 5 trades a day. So if you started with 100 shares, the investor here would have made over $16,000, while the day trader made 610, and the swing trader made 299, and the investor made 166. So you can see 610 versus 168 is quite a difference. But the trader made 29,900, and the day trader made 61,000. That's with 100 shares. So that makes sense to do that instead of working in McDonald's. Of course, all these are hypothetical based on those charts I just showed you. So in the same amount of time, 47 cents in Apple in 1981 and the current price of 156, the investor would have made 399% profit. So that's really good. Everybody looks at that and says, if you'd only held from, whenever. But the trader made 635% profit and the day trader made 1,200%. It's a big difference when you look at it that way. And that's why I'm both a trader and an investor. So I'm a trader of the E-mini and an investor in stocks. Well, swing trader, really. I call it investing because I hold for weeks, sometimes months. I held the NVIDIA and the Apple for months. Tesla, I'm a trader. So is it possible to do this ideal stuff? Well, yes and no. You can't catch all the moves, and I'm going to go back to my research shows me that you can get about 60% of a move. And that's what's reflected in my PHW indicator. But the investor gets to sit through long periods of scary negative markets. And the trader can go short. Here's the rules again. I've got a little 4-page summary of the Sunny Bands rules that I follow. And of course, these are for educational purposes only. And here they are. This is available on my website again, TimingResearch.com, by going to resources and downloads, and you can download the presentation. So level 1 rules. We're going to have 3 levels of rules, but we have to pay attention to all 3 at the same time. So these are not ordered by level of importance. We're going to pay attention to all 3 slides at the same time. So level 1, enter long when red candles have been moving downward and touch the lower outer band and then turn blue and move back inside the lower outer band if price confirms. Now by that I mean if you want to go long, you want the next price candle to go up. If you want to go short, of course, you want the next candle to go down. So I look for a confirmation after the signal. And that's what it looks like. You can see how well, you can't see, but this was coming down on reds, touched the lower outer band and came back inside and went to the DMA where it hesitated. The DMA is flat, so it hesitated, and then it went on up. I'll show you that rule in just a second. I go short when blue candles are moving upward, touch the upper outer band and turn red, and then we go short if price confirms. Now level 2 is what to do if the DMA, the midline, which is the average of the purple and gold. So if the DMA is flat, that is, the angle is visually sideways, then I don't, quote, expect price to move very far beyond the midline. And that's what you saw in that previous trade when it went sideways. So here's a flat DMA, and you can see that the flat DMA often acts as a barrier to further movement. So sometimes it'll go up and hit that flat DMA and fall back down and then try to hit it again, as you see there. Level 3 is, and this is just like an overarching during a trend, if gold is on top and the slope is positive, stay long until the gold is penetrated. And here you can see that. So it's gold's on top, it's going up, 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 up. We get through the upper inner band and touch the DMA, we're out. So the DMA got penetrated. Likewise, if purple's on top and you have negative slope, then you stay short until the DMA, the purple one, is penetrated. And you can see we're going down with purple on top, and then we hit the midline and we're out because it penetrates it right there. So now we can look at fast moving markets as traders. We look at the ES and gold and crude here. This is the S&P on a 15-minute chart. And again, the green and magenta bars are the night session, and the blue and red ones are the day session. So you can see on a 15-minute chart what yesterday looked like. It was pretty violent, straight up, straight down, but straight back up again. And on a 5-minute chart, here's the same thing on a much faster chart. And this is the one I look at for trading. And this has moving averages on it and the DMA. On a gold chart, this is what the daily chart of gold looked like yesterday. Here's what the 15-minute chart looked like, and you can see the difference. You've got to trade much faster on the 15-minute chart, but you also have to know that you're going to be catching smaller moves. And on crude, this is what the daily chart looks like. And here's the 15-minute, and you can see the moving average, the way it works with price. I only trade the most liquid contracts. So in Technical Analysis of Stocks and Commodities magazine, near the back, every issue, they have a futures liquidity table, and this is what it looks like. And you can see that the most liquid contract is right here at the top, S&P 500 E-mini. And its bars go out to the right somewhere off the page because it is the most liquid contract. Next, we get 10-year T-note, and let's see, bonds are right down here, and you can see the volume, the liquidity is getting considerably less. And a lot of people trade the NASDAQ 100. You can see the liquidity is not really good on that one. This is an important piece of information you should look at every month. So we're going to look at PHW. Which symbol has the potential to make the most profit, and therefore which ones should we trade? So you can see I have a little radar screen version of PHW here. And you can see the buy and hold is 45.73, and the PHW, well, the ideal is 54,000. Let's look at that first. And the PHW is 32,009. You can sort these columns by highest to lowest or lowest to highest, and I trade the one with the most profit. There's only one reason to trade, and that's to make money. If you're doing it for any other reason, you're in it for the wrong reasons. The only reason to trade is to make money. I do have people, I have people ask me all the time, why do you sell your indicators? Why don't you give them away for free? You're so rich, why don't you give them to us? And why do you do consulting? And why are you still trading after 43 years? Somebody told me a couple of weeks ago I ought to retire. And I've been asked these things many times, and I like to give back to the industry that's been so kind to me. That's why I do it. I love to teach. I love when somebody emails me and says, I made $19,000 on Friday. That's pretty cool. And I enjoy it. Every day I enjoy trading. And I still like making money. There's nothing wrong with that. So there's one more thing I want to tell you about, and that is if you have a profitable series of trades, if you're doing well and you're trading, I don't care, 1 lots, 2 lots, 5 lots, something along that line, and you want to know, well, when should I add a contract? I have a spreadsheet that helps me with that, and it calculates exactly how many contracts I should trade next. So with a profitable series, it's possible with strategic compounding to greatly magnify the profits. And I call this ultimate F. And why? Because it's reminiscent of Ralph Vince's optimal F, but without the enormous risk of drawdown that Ralph's has. So here's the trading performance again. This is with Trade Along with Sunny. I trade 5 contracts of the ES on that, and we're together for an hour. I trade with double the margin, and here are the results so far. Up 220%, 28% in 27 weeks. And that's what it looks like. That dotted line that goes steadily up, that's my goal line. And you can see we're keeping right to it. We're over $30,000 now. This is what the spreadsheet looks like, where I keep track of all these things. And this is what the extended equity looks like, $400 a day, not compounded. But look at the red line. this is what it looks like compounded in my Ultimate F spreadsheet. So you can have, what is this, like $55,000 or something by the end of that, uh, by the end of 120, 130 weeks. Or you can have almost 300 or $250,000 by compounding. And I, of course, do sell this spreadsheet. And this is the kind of thing that degrees in mathematics will do for you. So Ralph Ince told me there were errors in his equations and he couldn't find them. But I found them and he was grateful and he allowed me to call my version Ultimate F as opposed to his Optimal F. Ralph's a very special man. I like him a lot. And here's what the spreadsheet looks like. It's just a few columns and you can see it tells you the next number of contracts to trade. You start out with 1, then you graduate to 2. And if you're losing, it'll take it back down to 1 again. So you know exactly how many contracts to trade next. My website's moneymentor.com. Come on. And that's what it looks like. I also display, if you scroll down on this page, you'll see I display a fresh vantage point chart of tomorrow's predicted price. So you can see that. And if you're interested, of course, get vantage point. I have programmed all my own trading tools, all my indicators and strategies, and I use them in my own trading. That's what they're for. But I do make them available to the public and I show you exactly how I use them. I have Zoom sessions with you so I can teach you what I'm doing and you can replicate it for yourself. And I don't hold anything back. If you text me free at my phone number 760-908-3070, we can get you a free 7-day trial of any of the indicators. This is a unique opportunity. We're going to offer you free entry to trade along with Sunny on Wednesday. The daily TAWS subscription is $295 a month, but on Wednesdays I'll let you in for free. So text me TAWS or free, and these offers are good till only till the 31st. So we've got a few days left here, 8 days. Or you can give me a call. Free membership in my Money Mentor site, so you can have access to the members only pages. And that's already show. Well, it's up today over $30,000. We meet 1 hour every morning, and you can subscribe for daily attendance. And this is what it looks like again. I offer education and consulting, easy language programming services, mentoring. I have a complete bookstore on my website that's only trading and trading related books. I do a solving the puzzle distance learning class, and I offer the indicators that I use myself in my own trading. I have a Sunday night newsletter. If you text me SSS, I'll send you the next newsletter. And I do the daily live trading room. All these things are going to be available on my website under the membership. So let's see now. Do we have any? Why do we see narration on the screen? Because I have it set to that by default and I don't know how to get rid of it. If you've got any ideas on that, give me a call and help me. And that's an AI thing. What other questions do we have? Nothing. Any questions, anyone? I'm going to give you my information again. There's no such thing as a stupid question, so ask away. And if you have a question, surely someone else does too, so speak up. Do you use seasonality? No, I don't. I use self-adaptive dynamic moving averages. Do I have a link to sign up for the free Wednesday instead? I have a link to sign up for the free Wednesday instead. Oh, you don't want to text me. I see what you're saying. So I'll type it in. moneymentor.com/ I think it's form_free trial. No, I don't know it. I'm sorry. I'm trying to come up with it and I don't have it on my clipboard here. So thanks for your attendance. I appreciate everybody's being here and all those who are going to see us later on YouTube. Thank you. Thanks, David, to Timing Research for hosting the event. I love talking for you with these. And I do love to visit, so give me a call. Sunny Harris, 760-908-3070. And it's not a sales phone number. It's my cell phone. You can catch me when I'm at the gym even. Or you can email me, sunny@moneymentor.com. My website is moneymentor.com. Thank you so much.